Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I am Manisha Gupta. Well, it has been a turbulent week for commodities this time around, thanks largely to the ongoing trade war between the US and China after the US proposed its move to impose import tariff on Chinese products. China retaliated in a spectacular fashion. China is all set to levy a $50 billion worth reciprocal tariff, which will hit mainly the agriculture commodities exported out of the US. China is going to impose import tariff on soybean, wheat, corn, cotton, sorghum, tobacco, meat products, etc. This move is set to specifically target the states that supported President Trump during his campaign. Now, to discuss further in detail on what it really means for the global commodities as a whole, we have with us Jonathan Bharat of Ayers Alliance, and also joining us is Akash Doshi of Citi Research. Gentlemen, hi, thank you so much for joining us. Akash, let's start with you first and let's get into the bone of contention, the US-China trade war. China is a major consumer of many agro-commodities. How do you think the tariff imposition by China will impact the US and the global commodity prices?
Thanks, Manisha. We think the recent escalation and ratcheting up of US-Sino trade tensions does potentially increase the risk of a full-fledged trade war, but eventually we think cooler heads will prevail. On the commodities side, I think the biggest announcement this week was that China would target the US grains, and particularly soybeans. Those are produced largely in Midwestern US states that largely supported Trump for his bid for the White House in 2016. And it's something that will definitely hit the average American. Whether the opening bid from the Chinese and the 25% retaliatory measure on U.S. grains exports will materialize is interesting to see, because we don't think they can simply source supplies from Brazil and Argentina alone. So this might be a pretty aggressive step from China as a countermeasure to U.S. tariffs in order to bring both sides to the negotiating table and hopefully see some de-escalation of these rising trade tensions, which clearly have ratcheted up sharply since mid-March.
Well, Akash, that really is the hope, that it brings both the economies to the table and there is some de-escalation of the war that we are seeing right now. But Jonathan, coming to you, while of course the agro-commodities is one part of it, the crude oil prices also have had it bad. We're closing this week on a negative note. Where do you see now prices taking it from? Is it going to be macro? Is it going to be the individual fundamentals that will drive the prices from here on?
Yeah, well, I'd certainly like to, I can't wait to wait for that day when it actually does start acting and we can get a little bit more news out of OPEC or supply and demand. But you're 100% right. I think the focus is on US-Sino relationships at the moment. I do get a sense that crude is actually, whilst it's in this range, it's actually relatively positive, because whether it's going up or whether it's going down, at least our books can balance themselves out because we don't have these large fundamental moves. We don't have these large technical moves. So at the moment, I think whilst it stays within this band, I'm quite comfortable with it. Before we went into these trade discussions, we had this upward bias. I still feel that's still with the market at the moment, but once again, it's all been overshadowed by the Sino-US trade negotiations.
So, Jonathan, but what is your overall sense on the crisis going forward? How do you see this quarter panning out?
I generally feel that it still will close on a positive note. But I do think, get a sense that when we pick up more supply, when I look at the current macro in terms of GDPs, there is this, feeling that things will slow down as a result of what we're seeing. And if that's the case, demand will also start to slow down. So I think we're looking for prices to continue relatively bid and trade to the top end. But I don't see that lasting. I actually see that more supply coming on tap, and I actually see prices actually start to come off a little bit. I think, as we know, prices too high tends to restrict the demand, restrict economies. Prices a little bit lower tend to expand. So given where we are at the moment, I would say we're in for a little bit of higher prices, but at the end of the day, they should come back lower.
All right. But Jonathan, what is your sense on the crude oil prices now? Because the street clearly is divided. Some reports suggest 50, the others 80. What is your own range?
Well, I think the consensus you actually hit on that. We could try and get a little bit closer than that. But I think when you do look at it, between that 60 and 65, that's where we'd like to see it. I think if I see it up around that 68 area, I think it's expensive. If I see it 60, then I think it's cheap. So I guess trying to get those levels, it's hard. It's a commodity where I think you can just trade the range, and that's exactly what we're doing.
All right, so expected to consolidate and stay firm in case of the crude oil prices. But Akash, coming to you now, it's not just soybean when you look at the agro commodities, but cotton, corn, wheat also form the part of the China list, which has a lot of agriculture commodities there. How have you seen the rest of them perform?
Yeah, so the list is largely targeting agriculture commodities in the U.S. Initial list of $3 billion worth of products. On the agriculture side, it mainly directed towards specialty crops, pine nuts, fruit, certain wines. So it was largely absorbed by the market. I think the big surprise there was one on pork. But China can probably withstand an import tariff on pork against the U.S. because right now it has large local supplies and local prices are actually quite low. So they actually can go after the pork trade a little bit in the U.S., which is much smaller than soybeans and corn. On the cotton side, they actually already have a tariff rate quota in place. They're not a major buyer of U.S. cotton per se. They're not a major buyer of U.S. corn. Actually, China is the second largest producer and consumer of corn globally. So they're actually very self-sufficient. They actually import around 5 million tons per annum globally. So it's not a big impact, we think, for U.S. corn exports, which has a lot of other buyers, South Korea, Mexico, Japan. On the other hand, for soybeans, it's a game changer. China represents 2/3 of the global soybean trade. U.S. sends over half of its soy exports to China, and Brazil sends nearly 2/3 to 3/4. So China is the big game in town there, and there we're seeing the sharpest impact, both from market perception as well as the potential changes in plantings down the line.
Akash, the view really is that since these tariffs are still proposed, there is not a start time to it, and the negotiations perhaps could go on in this month, may spill over to the month of May as well. So how long do you think that the markets can sustain a wait and watch mode? How long can the uncertainty go on?
Well, on the U.S. Trade Representative side, there will be a public hearing in the middle of May, so around May 15th. And we're currently in the middle of a 60-day comment period, which will allow feedback. Notably, the American Soybean Association, as well as several biofuel groups in the U.S., as well as other farming lobbies, have already petitioned against these moves by the White House and the executive branch on putting these measures and tariffs on China. The auto sector has also been quite aggressive in decrying this type of move. On the Chinese side, look, it was a stronger retaliation. They put up $50 billion worth of tariffs at 25% on their target list of 106 products, similar to the 1,300 products that the U.S. did just a day earlier this week. So we have to see what China will do. I think they're in a little bit more wait-and-see mode because they haven't announced a date of implementation. They're actually waiting to see the U.S. reaction. But I do think this uncertainty persists. From an asset market standpoint, there is some more optimism in the last 24 hours that cooler heads will prevail. You're seeing this in the performance of risk assets such as equities, as well as a bit of a rebound in commodities markets over the last 12 to 24 hours. So there is hope for that. But yes, this uncertainty is likely to prevail at least for a few weeks because on the U.S. side, we probably don't have a definitive answer until after late May.
All right, and that clearly is not a very good news. And I understand that we are talking a lot of commodities here. But Jonathan, the metals have had it really bad. We are closing this week in the strongly weaker side on this one. Anything that tells you is a buying opportunity in this sector?
I think so. And I'm starting to lean a little bit more towards sort of being a little bit more overweight in the copper market, just purely because I just see there's good value there at the moment. We continue to forecast a deficit in that metal, and I think the cheaper it trades lower, the lower it trades, the cheaper it gets.
All right, copper it is then. But Jonathan, precious metal perhaps is the only area that has been getting some attention because of the safe haven buying. But we haven't been able to close above 1350, 1360 kind of levels. Are the current levels a good time to buy though?
Well, I tell you, I always get excited when we're up at about 1350 because I am looking for that breakthrough, that 1360, 65. That's a key level for me. And if we do see that break when we've got some good things, can actually see it trading up through that 1400 level over time. I actually feel that it does look quite positive. When I look at it from a technical basis as well, it actually looks quite constructive. So the current price volatility we're seeing, in my mind, suggests that a base is trying to form. And I think when we finally break through that, then we've got some good things to the top side for gold and also for silver. So I still remain very bullish both those metals. Not sure of the consequences as to why they will trade higher. I just hope it's not that dire, but from a technical point of view, they look quite positive.
And Jonathan, it's not just commodities or equities. The currencies, of course, have been taking a lot of impact from what's happening between US and China. What is your sense on the US dollar from here on? Because that really seems to be trading on a firmer note, a 2-week highs as we saw in this week.
Well, I think at the end of the day, there are other ways to stimulate economies. And, I get a sense that the US dollar will remain weaker over time. I know a lot of people are sort of forecasting it to remain relatively well bid, but I think there's a lot of international monies we know tied up in the US, and I think if people get a sense that they want to move that back home, then the US dollar will come under pressure. I also think the US dollar coming under pressure will help the US in terms of its exports, and if it helps its exports, then the domiciled, comments by Trump about motivating homegrown stuff become more relevant. So at the end of the day, I think the US dollar will be weaker, and I think that should be pretty positive.
We are now joined by Manish Singh, Chief Strategist and Head of Investments, Crossbridge Capital, joining us. Manish, hi, it's a pleasure to have you on the show. We've just discussed a whole host of impact that we have seen from the spat between US and China on various asset classes. But it just boils down to one thing on how long can this uncertainty really can go on. What is your sense? I mean, while you've been studying, reading about all of this, what does the analysis say? Is it going to be a full-fledged global trade war, or do you see it actually boiling down to a negotiation?
So I strongly believe that it won't be a full-fledged trade war, and these are all negotiating tactics which are welcome. Because clearly there is a huge trade balance in favor of China. I mean, China exported $500 billion of goods to US last year, and US exported only $130 billion. So I think that the concern of US is genuine. However, I would like to say that it's not something that US can just wish and they will get a trade balance. I think what US relies on, products from China, it's not something they can manufacture by themselves, and they rely on for a good number of reasons, because it can be produced cheaply, which US cannot, and the labor costs are much higher. So I think that what is likely going to be, there is going to be a negotiated solution, which will mean that China will have to open up its market to US, reduce tariff on cars which are high, US cars into China. That will be seen as a victory for Donald Trump, President Trump, to take to his voters and to his constituency, and for them to end up having some sort of a deal. Now, that may not be happening immediately, because what US has said, I mean, there's a 60-day consultation period on the tariff that they have imposed. China hasn't even put a date. So people might get over worried that it's going to happen tomorrow. No, it could take weeks and months, of how these things would evolve.
So what is your sense on how long can the global market sustain this kind of an uncertainty, the tit for tat, the retaliation that we've seen coming in, or would you really want to put a date to that?
So I would say that very soon people will get tired of this. I mean, that's my honest opinion. What's going on is that the initial reaction has been because people thought, oh, this is going to get imposed tomorrow or now or day after, and many people didn't even question that there was no date on it. So very soon market will get tired, and the news media will get tired of covering tit for tat every day that's happening. What is going to be important is that if there was a date put on it, then I think it will focus mind. But you also remember what Donald Trump said last night when he talked about increasing this tariff to another 100 billion. He said he's still open to negotiation. What does that tell you? That is not a language of a trade warrior. Like he's looking to settle score or trying to benefit from it. He knows the reality that if you look at how well China is placed in manufacturing world, it manufactures 25% of global capacity that is manufactured in China. Over the years, they have honed the skills and they have become better and better. It's not something that US can compete on. So I think if US thinks that they can get manufacturing jobs back into US, I don't think that really plays out, and they will very soon realize that the time to impose tariff was 10-15 years ago. That battle has already been lost. It's more about understanding the reality and coming to an adjustment, which means that China also opens part of the market and US is able to export more, but that's about it. That's where I think we are headed.
Manish, there has been a lot of protectionist measures, if not measures, definitely a lot of conversation, but would you see world being back to the same place after what we have seen in last week or 10 days? And also, how would you look at the WTO now? Because a lot of people have called WTO as a very redundant organization as we stand on that. In the light of what we have gone through, how do you look at the global trade from here on?
Yeah, so what I would say that, institutions like WTO, it has been working on, well for now. But, people on all sides have had complaint. US has filed many cases against China in WTO. China is using the same method that US has used, and now they have filed a complaint against the US tariff. Maybe, it's an organization that needs to be revised and mandate needs to be reset. And for people to think that bring such an institution into the 21st century, where the world is far more global, far more interconnected, and some of the measures put on that, it just takes far longer to come to any resolution. President Trump has threatened that he might leave WTO. If US leaves WTO, then that's it. That's the end of WTO. But if you ask me, do we need a body that coordinates trades and sets standards and procedures and a resolution mechanism, resolution body? Of course, we need that. So I would not say that institutions like WTO should just disappear. I think that will be very bad. There needs to be a coordination body, but just that it has to be well represented. Rules have to be well set, and it should function like a modern institution, which is leading with a very dynamically changing world.
I also want to talk to you about the various asset classes and the kind of impact, reaction, knee-jerk reaction, so as to say that we have seen across asset classes, whether it was equities, which was reacting to whatever China and US said. We've also seen the same thing happen for currencies, for commodities, for agro-commodities as well. The way the week has been, how would you summarize that, and how would you want to start getting back into trade Monday morning?
Yeah, so when I look at where we are, so we'll have the US jobs report in half an hour's time now. We are going to have US earnings season starting in right earnest end of next week. I would say that these data are going to be turning point, because what is happening now, that even if the analysts are predicting a good earnings report for Q1, market is not taking note of that, because everyone is just obsessed with what President Trump tweets and what he says about Amazon, says about the trade tariff. So in this world, where there is less positive news at this time, it just preys on everyone's mind that maybe things are too negative. I disagree with that notion. I think if you look at the global GDP growth and also growth in US, somewhere around 2.5%, going on 3%. In Europe, Eurozone is going at 2%, and emerging market is going very fairly. And Q1 earnings are expected to be better from what we have seen so far from the estimates. Then it doesn't make you feel bearish. I would rather see that you will see a turnaround in the market, because it will react to positive earnings. It will also take note that these tariffs are not going to be imposed this weekend or tomorrow. There is a timeline on it. And also take a note that there is a huge amount of negotiation which is going on. And most importantly, if you think about it, this tariff does not benefit anyone. It doesn't benefit China. It doesn't benefit US. So things like tariff and these things have to benefit someone for it to apply. I take you back to Reagan administration when they imposed $300 million of tariff on Japan. The reason they could get away with it because, you know, Japan was a US protectorate, and it couldn't say, well, we are not going to take this tariff on. So it's very different. China is not a protectorate. China is the largest economy in terms of PPP, and certainly the biggest competitor and closest one to the US. So these are not 1970s, 1980s. You're talking about a supply chain which is global, which is very well interlinked. I mean, if you look at iPhone, which is manufactured in China and sold in the US or globally, half of the companies contributing to it is from China, half is from outside. So, you know, I think one has to be very careful who are you putting tariff on. It could hurt non-Chinese companies more than China.
Oh, well, absolutely, and nobody really stands to earn from this. Manish, thank you so much for joining us. Well, that's the view coming in from Manish, saying that there is plenty positive to watch out for as we start the new week, and the markets perhaps could turn around for the positive here. Of course, the tariffs are not going to be imposed anytime soon. That's yet another relief that the markets would start the next week with. But that's all the time that we have on Commodity Champions this edition. Thank you so much for watching.